It is Monday, the 13th of May. So I thought, following the Bank of England meeting last Thursday, we'd take a quick look at the swap rate chart just to see what the outlook's looking like, what the market is thinking, and where we might be going next with mortgage rates. So if we take a look on screen, a quick recap for you. This chart that you see stretches from November 2022. And because the markets haven't yet opened, as you can see, this chart's reading as of the 10th of May, which was last Friday. Now, for those of you that follow me regularly, you will know that I always tend to look at the 2-year, the 3-year, and the 5-year rates just to give us an indication of what's going to happen over that period of time, because typically it's these periods that tend to be most popular with clients when they're considering a fixed rate mortgage. And the good news, as you can see, is that from the 30th of April, that the swap rates have dropped, which is fantastic news. We just scroll down slightly, we can take a look at those numbers in a little bit more detail. So back on the 30th of April, the 2-year swap was 4.678, now 4.472. The 3-year was 4.461, it's now 4.231. And the 5-year, interestingly, was 4.179, and now it's gone below the 4 to 3.949. The last time it was in the threes was back on the 28th of March. And then obviously since then, as we've been reporting, we have seen mortgage lenders increasing rates on an almost daily basis. Now, what we can also do on this chart is take a look at where the markets think rates are going to be quite some distance into the future. So obviously lots of things can change, and this is just based upon information at present day. So if we take a look at the forward curve, this is the 3-month compounded swap rate. So currently sitting at 5.145. Looking along the bottom, we can see the actual time period in question. And as you can see, over the next 4 years, there's a steady decrease right down to November 2028. Followed by a steady increase really to where the markets think that rates are going to settle by the time we hit May 2034. So that's 10 years ahead. But what has been happening in the markets in general? So obviously the Bank of England did meet on Thursday last week, and they decided to keep the base rate on hold at 5.25%. Interestingly enough, this time round, 2 members of the committee voted to decrease rates, which is good news and a real indication that that's where the market is heading. Andrew Bailey indeed spoke to the press following the meeting. He said that all the economic data was moving in the right direction, and the strongest hint that there were going to be base rate cuts this year, as we're expecting. So since Thursday, it's been fairly quiet from mortgage lenders, not been a huge amount happening, but I would suspect that now we're seeing these swap rates reducing, that potentially over the coming days, weeks and months, if things keep moving in this direction, we're going to start to see lenders decreasing their mortgage rates, which is obviously great news if you're looking for a mortgage right now. So what does this mean for those of you that have got a mortgage? Well, obviously, if you're on a fixed rate, there's no change. Your fixed rate will be what it is until it reaches its end date. If you're on a tracker mortgage, until the Bank of England start reducing the base rate, your rate is also going to remain the same. And if you're on a standard variable rate with your mortgage lender, well, my question is, why are you? You should be on a different rate, because the standard variable rates with lenders are so overpriced. What you really need to be doing is talking to a mortgage broker who can look at your options and find something that's likely to be much cheaper for you. Now, if you're looking for a mortgage right now, what do you do? Do you go with a 2-year fixed? Do you go with a 5-year fixed? Or do you even go with a tracker option? So this is the question that we get asked all the time. And the thing is, it really comes down to personal choice. It's not just about what the interest rate is. At the end of the day, what you should be considering is your own circumstances. Is this going to be your forever home? Is this going to be a stepping stone to something bigger? Are you planning on moving somewhere in the next 2 to 3 years? Are you going to have a family? Are you expecting any changes in your job or your employment role? Are you going to be getting married and settling down in a relationship? Lots of things that you need to take into consideration when you're considering the best mortgage product for you. Please, can we just all move away from the idea of just want the lowest rate, because it isn't quite that simple. The lowest rate for you now might not be the right decision in 6 months' time. So it's more about your personal circumstances than the rate itself. As long as the mortgage is affordable, that should be the most important thing. And then any other movements in mortgage rates, they're going to happen anyway. So as long as your mortgage is suitable for you, for your circumstances, and you can afford it, that is all that should matter. So if you're going to be talking to somebody about a mortgage in the coming months, please try to get away from the idea of I just want the lowest rate, because that's not the best way to approach things. Hopefully you found that useful. As always, please do like and share the video. Please subscribe if you haven't, and take care until next time.